Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to look at the financial earnings of the Citigroup, which recently released its fourth quarter earnings for the financial year 2023. We are trying to see if there are emerging opportunities after these earnings have been released, as we have now much more clarity on the fundamental side of the bank's business, and also there is emerging clarity on the technical side. So, in light of these developments, we are going to look for the newer trading and investment opportunities. So, first, we will consider the financial earnings, and for the fourth quarter, in which the Citigroup has suffered loss of almost close to US $2 billion. We saw there were many reasons, many drivers which impacted the Citigroup's business negatively, and it resulted in this loss. So the bank has taken this in its stride, and it is now chalking out a strategy to turn things around and generate more revenues and resultantly more profit, because for the last quarter, that is the fourth quarter, the revenues were down, the profit was down, actually it was in loss. So there were multiple factors which went wrong for the bank, and the Citigroup, being a systemically important financial institution, would like to stay on the solid footing and a solid ground. So it is imperative for it to turn things around and get on a profitable side. And to that aim, it has already initiated some key strategies. And the first thing any business will look to do is to cut costs. So it is trying to simplify its business operations. It is pulling out from various markets where it is not really seeing much traction, the markets where the revenues are lower and the operating expenses are higher. The Citigroup is pulling out, it is consolidating its business operation under five main groupings, and it is pulling out of multiple countries where it hasn't really seen much penetration in the market share, and rather wherever it feels that it is a fringe flare, and in those market it is now thinking of pulling out totally, instead of again spending resources to gain the market share. So for the Citigroup, the restructuring initiative is also adding to the cost, but it is like one-time expense, and these expenses won't be recurring in coming quarters. So if we consider the FDIC charge and also the restructuring charges, these have contributed largely to the net loss the Citigroup has suffered in the fourth quarter of fiscal year 2023. So we have quite solid reasons to believe that in coming quarters the things will turn around for the Citigroup, and eventually it will be able to generate and maybe surpass prior quarters earnings. The Citigroup has also decided to slash its workforce, and its core group will be comprising of around 180,000 employees from the current headcount of close to 240,000. So there are restructuring plans underway, there are initiatives underway to cut cost and increase revenue, and resultantly the bank is expecting to make more money, to make net profit, higher net profit in coming quarters. So first thing first, we look at the past earnings as a guide guiding light to the future. And if we look closely at its earnings for the fourth quarter 2023, you will see that in terms of year on year, it has suffered decline. The revenues are lower, around 3 percentage point. The operating expenses are up 23%, and the cost of credit has also gone up. The income is, of course, down, where it is now in loss compared to the US dollar 2.5 billion of profit in the same quarter of 2022. And even for the third quarter of 2023, it had generated US dollar 3.5 billion in profit, but for the last quarter things went all downhill, and resultantly we saw it suffering loss of US dollar 1.8 billion. Now, if we look at the reasons, the contributing factors, the FDIC charge of US dollar 1.8 billion is also a big expense which has added to the loss. And then there is cost of restructuring because it is firing many employees and closing some divisions. That has resulted in outflow of these related expenses, and that has pushed the bank's total expenses up around 10 percentage point. So if we take these two key headline figures, we will be arriving at total of around US dollar 3 billion. So if we add, or you can say subtract from the current loss, you will have the net profit of around US dollar 1.5 billion. And of course there are other factors at play as well. So I am quite confident, quite hopeful that the Citigroup will be able to turn things around, and in course of time, in coming quarters, we will see it making much more profit. So that's my outlook on the fundamental side. And if we consider the five core businesses of the Citigroup, the services, markets, banking, US personal banking, and the wealth arm, you will see that these are mixed results. In some segments, it has been able to generate money, generate profit, but in some other segments, it has lost money, and on balance, the revenue is lower, whereas the net profit in the prior quarters has now turned into a net profit for the fourth quarter of 2022. So this is on the fundamental side. If you want to go through the total report, it is publicly available on the investors relation page of the City Group, and I would suggest going through the report, or maybe you can even take the help of AI chatbots to summarize and generate insights from these earnings report to see if there are few fundamental factors which you can scan through and then utilize for making a decision whether to trade or not. Now we head to the charting pattern. In it, you will see that the Citigroup's hourly chart has been quite volatile, particularly after the release of its earnings report, where it saw sharp moves on either side. First, it rose and then it gave up all the gains only to rise back and then again start declining. And in the last week, we saw it finding support close to US dollar 50 level, and from there on, it has again rallied back around 8 percentage point. And I think we will see it continue to trade with upward bias, and in course of time it is expected to cross above the prior swing high, which is there around the price level of $54.73 per share, which was established in the first week of this financial year, new calendar year. And for us to take advantage of this possibility, I think adopting a buy on dip strategy is going to be the best thing to do, because we will have to consider the prospects from short term, the medium term, and the long term. And in the short term, we have to consider the initial momentum, the immediate momentum, and for that, when we are taking short term trading decisions, we have very small time horizon, a limited time window, and in it, we need the underlying to move in the desired direction, or if it doesn't, we don't really want to lose too much money, and our stop loss also needs to be sharp enough, and for that we have to figure out the opportunities which will provide the best of both worlds. So looking at the current environment, I feel we will have to allow it more time to consolidate. Maybe couple of sessions will bring in more clarity, and depending on how things play out, if it is able to hold in the current consolidation range and not really deep too much towards $52 or below, I think we can expect this current rally, current upsurge to take it past the $54.5 level, and maybe this time around we will see it making newer high. So see how things shape up for next couple of quarters, and sorry, next couple of sessions, and then we will have much more clarity on the technical side of hourly chart. If we consider the daily time frame charting, here we have seen the Citigroup share rally more than 30 percentage point in the last 2 months, and even at the current juncture it is comfortably sitting close to these higher side. In such eventuality, we will have to go for a wait and watch approach, because at the current juncture, I don't really feel we have a good risk reward ratio. Maybe after some more consolidation, we will have the clarity merge and also better risk reward ratio. So at that point in time, we can make a fresh assessment and go for a new long trade if we don't really see the Citigroup dipping on the lower side much. So for the next couple of weeks, the price level of around 48 to 50 is going to be crucial from the medium term perspective. And if the Citigroup keeps making higher highs and higher lows and doesn't really dip much below $48 level, I think we can indeed take our chances and go for a new long trade with the expectation of further rally in coming weeks, coming months. Now we shift our gaze to the weekly time frame, and in the weekly time frame, the momentum has been bearish for a while now. For last couple of quarters, the momentum has been bearish, and it has found support closer to $40 level, but it hasn't really risen much. So this time around, it seems like an exception that we have seen this strong continuous rally from these lower levels. But the thing is that if we go for a new buy trade at the current junction, I don't really feel the risk reward ratio is good enough, nor this kind of risk is warranted of around 30 percentage point. Maybe we can wait it out and go for a newer trading opportunity another day. Maybe in coming quarters we will have better opportunities coming our way. And if you feel that it is likely to remain in bearish momentum, then you have to also factor in that there has been newer high formation, even though the current low formation is of lower lows. But now that we have a higher high in place, we will have to be cautious, and as and when new correction happens and on the lower side, if we see the Citigroup holding the price closer to 38, then eventually we can expect the turnaround. But at the moment we can't really say that from the longer term perspective things have changed from bearish to bullish. Maybe the things still remain bearish, and it is only a matter of time before the bearishness comes back to haunt the Citigroup shares again. But right now, we can take it easy and simply sit on the sidelines while waiting for the better opportunity to emerge. And in due course of time, we will surely get it. That's all from my side for today's session of Daily Stock, where we consider the Citigroup's financial earnings and its technical charting to see if there are emerging opportunities for us to trade and invest. And in today's session, the opportunities related to the Citigroup are almost non-existent from the risk-reward ratio as well as a technical perspective. But in coming sessions, coming weeks, coming months, I do feel that the opportunity is likely to emerge in our own framework, and accordingly, we will be able to trade and invest in the shares of the Citigroup. Now it's time for me to sign up and take leave. If any of you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. Thank you all for joining in. If you have found this information useful, do like and subscribe to our channel, and you can leave the feedback in the comment section as well. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then, goodbye.